everyone, and welcome back to another market outlook. If you haven't been watching, please be sure to go back and watch some of the videos that we posted. Some of them are educational videos, some of them are market analysis, and for the most part, they're pretty good. Today, we're going to do something a little different. I've been coming to the chart, I usually have it marked up, but I want to give you a true top down analysis of how I'm going to be looking at gold coming into Asia session. So hopefully you can get a good idea of the flow that we work with, and then you can take something from it. So let's go ahead and jump into it. First things first, this bidder price over in this area, pretty much null and void. I'm not going to be paying attention to that. I'm going to be more so paying attention to price in this area. Why? Well, if price was a little bit lower, okay, and we were actually trading in this kind of area, the prices dropped down back in the 1800 1900 area, we could use this side of the chart. But since we're trading in unknown territory, I'm more so just kind of want to pay attention to what price is currently doing. Okay, so I'm going to be paying attention to this chunk of price over here. um Typically we would throw a high on it, but again, gold has just smashed through this high. So no point really in that either. But what we can do is get a feel for what type of patterns we were working with on gold. We have a beautiful flag right here. We're going to leave that one just because that kind of shows the trend that we're in. Okay. Um, Again, we're looking for trend. So got a higher low, got a higher high, got a higher low, and now we're forming a higher high in this area. So we're in an uptrend for any of those who are new to the market. And if you're not new to the market, don't think that you're not above doing some higher highs and some higher lows and getting a good feel of where we actually are trending in the market. It's always important to know that type of thing. So let's go ahead and look. More so now, since we're on the daily, we're going to look for where price currently is, and it's forming a beautiful flag. Okay, right here, top part of the flag right here. And there's no set area of where gold has to go right now. That's the beauty of it, right? It could fluctuate higher, could fluctuate lower. And so this is where you don't want to be forcing an opinion on the market. You want to be anticipating moves by um, not putting forecast out there that you have to stick by. You want to read price action for what it is. So we're gonna go ahead and we're drop down to the 4 hour. Currently, let's do this. We're on the 4 hour time frame, which is still a higher time frame. Went from weekly to daily. We got a higher high, higher low, higher high, higher low. And now, typically in fashion, we'd go ahead and we're looking for a higher high. Now, the market doesn't have to make this all at once. That's fine. We just want to know where we're at. So let's go ahead. We're going to throw text on here. Caps lock it. High. Just as a reminder, and if you hit command and drag it with your mouse, you can duplicate your text. Save yourself a little bit of time. And now all we got to do is command drag. And then same thing here, command drag. And now we have kind of like a idea on our higher time frame of where the market's been. We see we got this descending pattern right here. That meant price was slowing down in this area. And also it gives us a clue for some structure. It's not perfect, but typically you have three phases in a market. Okay, you have this impulse, correction, impulse, correction, impulse, and then you would have downtrend, correction, downtrend, correction. downtrend. And that's typically how you get your market range. So, same thing in a pattern though. We usually have three phases in a pattern: impulse, correction, impulse, correction, impulse, and then guess what? Correction. It's just flipped sideways. So this is why patterns are so good for trading. A lot of it's hit or miss for people. You know, there's no right way, there's no wrong way of how you need to be trading the market. What's important is that you find what works best for you. If you can find an edge in the market, an edge being a strategy or a set of analysis that when you come to the market, you see those certain things every single time or once a week, twice a week, and you throw risk management on top of it, typically that's all you need in order to be a good trader. I'm not one of those people like who says you can't use MAs, um, you can't use Fibonacci's, none of that stuff. Like, if you've seen it and you've developed an edge inside the market for it, like, yo, do it, especially if it's something that's profitable for you. Look at there. Wife's calling just a second, y'all. Okay, sorry about that. The wife was calling me and was wanting to know about dinner. So, yeah, got to figure out dinner after this. Anyways, yep, we're still on the 4 hour. We're still looking for our patterns. And now on the smaller time frame of things, Kay, don't forget our bigger analysis of higher highs and higher lows. We're going to start to draw these into, okay, where we have like a shorter term frame of higher highs and higher lows. Don't forget where you're at in marketplace, but this is important. Higher high, higher low, higher high, higher low. In the market, we're going to go ahead and drop down. Okay. Take our paintbrush off. You can see we broke that higher high there, and now we have this higher low here. So typically, if we were going to change direction in the market, which I don't think we will, because what we're going to do now is we're going to zoom back out to our 4 hour and take off our paintbrush tool, but we're going to grab a horizontal ray. Click in over here. You're going to go down, grab horizontal ray. I make a star and put them on my toolbar. But we just grabbed this liquidity zone here, but this is the one that we're going to look out for. Liquidity zone being an area of where price is likely to come back and take out that high or that low, depending on which way the market is trending. So we're going to mark that for our liquidity zone. And then we're also going to mark this low here. Boom. And we're going to make that a 1 hour. A 1 hour liquidity zone for the low. And now we kind of have a frame of where the market is, where the market would have to go in order for us to kind of shift direction. Okay. So let's take this off. We're now dropping down to our 1 hour. And now for some people, I already see a key pattern that I'll love to trade. And tighten that up there. And I bet if I was actually being smart about it, it would be that, because over here, price broke above and then immediately closed back below, so it didn't really hover back above it too long. So you could put it here, you'd have a near miss, quote unquote, but really if you just are smart about it, tighten that thing up, read between the lines, that's what you're going to get, is this nice trend line. You're going to command drag, same thing there. And when you draw your trend lines, You want to put your trend line so that it matches even with price. Okay. Computer is being a little glitchy right now. So this is our trend, and what you would call this is an ascending Okay, I'm gonna delete this since that one's already marked, and I'm just gonna command drag again. Click, command drag, boom, and then like I said, we're just gonna put this where price currently is. Because if you're drawing trends or you're drawing patterns, you don't want a trend line all the way over here, because what happens is at a certain point, like it's gonna start doing this. Say the market comes down, it breaks back above, then you're just trading through a bunch of mess and you don't know what's what. You want to keep your charts clean. You're not trying to quote unquote over predict something that's not actually happening. And that's why we like to keep our price, really neat on the chart. Okay. So we just got a break above this. Now what we're going to see is if price wants to go ahead and wants to move lower inside of this market, down back into this area, or if price would like to take it up into these spots again and go higher, breaking this right there. Now, there isn't a ton of clarity on any of these time frames right now. More so, like I can see the 4-hour up here. I'm not sure how price wants to get there at the moment. I'm for sure not going to try and force it. But I do know that for me to start to look for sells in the market, I'm going to be looking for a push below here. Some type of bigger flag to form. Really not a fan of how that one drew out. And then we would look for the sell in this area, or a flag right here and a sell right here in this area if we were looking for the market to go to the downside. But I still see so much potential for the top side. Like I said, I'm not sure how it wants to get there, what's going to make it get there. But let's go ahead and look. We got news on tomorrow at 7:30. Wait, it's tomorrow the 16th? Yeah. We have news tomorrow at 6:30 a.m. and then we have news the day after on Wednesday at 7:30 a.m. And I'm going to tell you something that most people aren't going to be willing to tell you. But for me, personally, if there is not a ton of clarity in the market, and for someone like myself who predominantly only trades one pair, which is gold, then I'm not going to be looking to take a position every single day. I'm looking to take a position like once a week, maybe twice a week, depending if the momentum is on my side. Like last week, we caught 2 trades. We had 2 nice trading days. Excuse me, 1 trading day. We had a 150-point move, and then there was another 70-point move that followed it. 70 points, 70 pips, 70 ticks, however you want to call your charts. And then the following day, we let the market retrace, come back, and then we got a little bit of momentum going back to the top side. I saw another liquidity zone for a buy up, and the move up was a solid move of like 90 pips, 100 pips. but then news came out and pushed it up, and we caught a 460 point move. So should I be forcing myself to trade this week? Absolutely not. But I'm going to be coming to the market to stay in tune with it and just wait. There's no need to rush. I heard someone say you got to look at trading as a business expense. Okay. Now, personally, I heard it another way, which was looking at it as a business deal. So when you look at taking a trade as a business deal, you're only going to make one good business deal a week, a couple, like two or three good business deals a month. So if you're taking 2 to 3 business deals a day, they're probably not going to be quality business deals. So it's not something that you want to force. It's not something that you want to rush into. You want to make sure that you're taking your time, that your analysis is there. And if the market isn't providing something that you're comfortable with and not providing something that you see, then don't try and force your opinion. Don't try and just join the market because you want to participate, just because you want to trade, or just because you're bored. Just because you're spinning your wheels doesn't mean you're making movement in the right direction, right? You can sit there and run in place all day long, but it doesn't mean you're getting anywhere. And that's such a trap that a lot of people fall into, is like you get in this cycle of like you feel like to make progress in trading you have to be participating in the market, and it's honestly the opposite. You can not trade for an entire month and you'll come out ahead of everyone else because you're not taking silly trades, right? You could take 2 trades a month, 3 trades a month, and because they're high probability trades, because they're high quality setups, you're actually going to come out ahead because you're banking a higher return on investment. You're risking 1%, but that one trade that you take banks you 6%, 7%. And you can be okay with walking away at 6%, 7% for the month. Doesn't mean that you can't wait again for another week or 2 weeks to take another trade that's that quality, but you don't have to be banking 1,000 trades a month. You should be getting your trading days back to like 10 trades a month, 13 trades a month. And by just reducing the amount of trades that you're taking, it increases your patience in the market. It increases the trust in yourself to be able to um, how to check the time frame. It increases the trust in yourself to execute on trades when they come because they're within your setup, because you know you waited for it, all the conditions are there. Then all you have to do is pull the trigger. You shouldn't be in that moment then thinking, okay, why? What are all the reasons for me not taking this trade? And you start looking for reasons why you shouldn't take a trade, and that's a whole other type of cycle, because you can have a high quality setup, but it doesn't mean that the market is in a good area. Like you can have a beautiful push down, a flag, but what you didn't pay attention to was over here on the left. You're sitting here in the middle of no man's land, where price usually likes to sit here and bounce back and forth and consolidate. So you're sitting here taking a flag right here in the bottom of the thing because you didn't pay attention to where price actually was. So now, just because your setups are there and you've been forcing yourself to take trades because you think you have to participate to make momentum in the market, you're shorting yourself on capital, and you're beating yourself up and getting yourself in a bad headspace. And that's just not a position you want to be in. Um, Hopefully, it helps someone out there that's currently trying to force trades and force positions in the market. But just know you don't have to. It's okay to sit. It's okay not to trade. If there's not a trade for this entire week, then I won't take a trade for this entire week. And that's okay. Because the next week, while everyone else has blown their accounts, they're having to reset accounts, I'll still be in the game. And that's just the way it works. We got 29 seconds. I hope you enjoyed this stream, this special episode. Definitely more so an educational episode with a little bit of mindset. And yeah, we will catch you tomorrow during Asia session, and I'll keep you with some updates. So look for some published ideas. Um, yeah, Peace.